This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. I'm going to give you my stock market update today. I want to focus in on the S&P today because there's some interesting things that have taken place. Number one, I want to look back in time and show you some big picture things that I have developed, and just kind of, there's always new people onto the channel, so I want to make sure I'm kind of keeping them up to date with some of the things that I've seen in the past and what we're looking for right now. But also, I also want you to understand that the markets are fractal. And so I'm going to show you a specific trade setup that developed on the smaller time frames, just so you can see that these patterns develop in all time frames and they look identical. Okay, so let's go ahead and get into this. Again, I want to focus in on the S&P. I am going to show this chart again on back-to-back weeks. I don't usually do that, but this is my 18s chart. It's a timeline chart, basically. I've got 18-day, 18-week, 18-month, 18-quarter, and 18-year moving average lines, all loaded on here. Okay, and that's what these are listed over here on the left. So I had been talking about the fact that we failed at the 18-day and the 18-week, which were both declining last week, and we got a hard move and automatically came down and tested this 18-month line. And look at how we're getting a really good reaction off the line. Now, also, I think it's important to also realize that as long as this is stair-stepping to the upside, that slope is up. And I love the look of this because I don't have to squint my eyes to see whether the moving average is rising or not. I mean, I can tell for a fact that this line continues to rise. And so no real shift there. Now, it could start flattening out. And, what I've been saying is that if we go through a period where we bounce off here and we kind of go sideways and channel and continue to remain sloppy but above this line could end up slowly starting to lose slope, and then it would be more like a break. If we end up breaking it down the road, it would be more like a break of a flat line rather than a rising line. And I think that's a lot more, it makes the market a lot more vulnerable. Let me just show you. I want to go back in time. I've got the S&P up for a reason because it has a lot of history on this server. So I want to go back and show you the 2008 peak, because I just think it's really intriguing when you see how this had been respecting the 18-month. Look at this. For years, it was respecting the 18-month line, bounced off it again, and then broke the 18-month, came down to the quarterly line, the quarterly 18, bounced up, and look at how it rallied to the 18-month, which was rolling over. And then if we want to take it another step and look at the different things that I discuss, look at the break of the trend line, the test of the 18, and failure of the 18-day, which happened to be a 1, 2, 3 to the downside right as this was going again. Then we had the exact same pattern that developed again here as a 1, 2, 3 topping pattern. Just really negative action leading into this decline where we had moving averages dropping or failing at the moving averages and the moving averages rolling over. So these are the types of things you want to be on the lookout for. I don't think we're in that position right now. If we go back to where we are today, we're still testing a line that's rising. So yes, we could get a drop. I mean, we've had that happen, obviously, a couple times in the past years. But in terms of a sustainable reversal and something that could be very, very dangerous to your personal and 401k accounts and your, retirement type stuff, it's this line starting to flatten out and rolling over. That's the thing we want to be really, really concerned with. Okay, let's go ahead and get into the individual charts. Actually, I want to switch to this one. I'm going to switch over to Spider, and I want to just show a couple things. So again, we're not going to give up this 18-month without a little bit of a fight. And you can see we've got 1 day left to the month, and we're now back above this line. So it's still respecting it somewhat. It's not like you're going to take, normally you don't just fall right through a rising 18-month when you have good momentum conditions in place. Okay. Now, The weekly line has come down. I mean, the weekly chart has come down and tested this low, and it's trying to bounce off of it. I mean, one of the things that has struck me recently is the distance between the price and the 18-day. That's pretty far, and I usually don't expect a breakdown from an oversold condition. And so the fact is that this coming up and consolidating a little bit, I think, is useful. Now, what I've been looking at and what I think is important is watching for a shift in trend in this time frame. And if we go by the letter of the law, we can really argue that we've taken. So let's just look at this hourly chart. We've broken the trend line. We came back and tested, and then we came back up through this peak. So that was your 1, 2, 3 to the upside. What I have been saying, though, is that I really wanted to see green DI kind of confirm. So I would prefer to see this come back and see green DI hold here. And then if we get something more along those lines, then, then I think there might be a little bit more potential. But we don't have that yet, although I have to say you have to kind of respect the day that this has had. The reason why I think this is all very, very questionable is that it's taking place counter to the higher time frame. Remember, I'm looking for this pattern, this reversal pattern, when we have that in conjunction with the higher time frame. And then I want to be aggressive. I would probably have taken it on this pullback here or back up through here if I wanted to play a 1, 2, 3 in conjunction with the trend. But when you're going counter to the trend, you want to be a lot more conservative and wait for more real signs of a reversal. And I just don't see it yet. It doesn't mean that we're not making a bottom here. It just means to me it's too early for me to have enough convincing evidence. What I want to do, though, from here is I want to take it down to another level, because let's just analyze this again. We broke the trend line and then we came back and tested, and look at what we had. We had a pinch play. You see how the MACD was holding here and pinching in? You can see it with the histogram sort of dropping back down. So we're pulling back here. Now we're below the 18 on this hourly chart, but we've broken the downtrend line. And we've got a pinch developing, and we have lower highs in the DI lines and higher lows in the green DI. So these are starting to pinch together. So we're getting a little bit of a sign that we should go through a contraction phase, which is obviously what's taking place. So you break the downtrend line, and now you have this pinch play that develops. Let's do this. I'm going to switch this monthly chart to a 10-minute, and I'm actually going to change the weekly chart to a 2-minute. So now we have kind of all this information here. So what I want to do first is look at the 10-minute, because this was the gap up this morning, okay? And this is not how we want to take a trade on a pinch play for the hourly. The hourly triggered on a gap up, right? And if I'm looking at this and I'm saying, I don't really want to do that until I get more confirmation on the 10-minute anyway. And so it came up and it came back down and tested the low and filled the gap for the morning. Okay, so if you're a trader, you got to kind of recognize what's going on here. You had the gap up, back up into this old high. It actually did a little failure. It went to a minor new high and then reversed, and now has come back to fill the gap. And then when we filled the gap, we pushed up, and look at how we tested and held at the 18 with another pinch. We had pretty much the exact same pattern. This one's even better, though, because it happened right at the 0 line. And notice how this one was holding the 18. We had lower highs, we had a nice little pullback, and then it started to take off, and we had a really nice run basically for the rest of the day. Now, one other thing I want to point out is that if you're looking at this pullback to the 18 and you got a double pinch, you got a pinch on the hourly and a pinch on the 10-minute. And for all we know, this could be happening on a monthly chart in a stock that you're interested in, say GE, which has been going down for a long time and trying to turn around, and you get a pinch play on the monthly and then a weekly chart, and then you'd go down to the daily. It could happen that way. I'm just showing you something that happened today on these smaller time frames so you can see it. So we've got a pinch here and we've got a pinch here. We have low ADX, but we have green DI crossing over on the 10-minute. Now let's go and look at what happened on the 2-minute. So as the pinch play was developing, look at the 0 line reversal with low ADX pattern. I mean, you guys need to learn this one pattern. If you're going to learn one thing from me, learn this one, which is zero line reversal, where we don't have a lot of overrun of the zero line, and ADX is low based on the fact that the selling was not strong. Okay, when that happens, we want to draw on our trend line. And when it broke that trend line, basically at 12:14, it went and rocketed ship to the upside. Now, just for an extra piece of information, if you are a short-term trader, meaning a day trader, the way you want to do this, and I know most of the time you don't want to take trades right in the middle of the day like this, but God, if you get a setup like this that kind of meets everything, you kind of have to take them. This is just really high quality, what was developing here. Now, this moves up. And we have confirmation here, and confirmation here, right? And then we pull back, we go to another new high. And notice how the MACD does not confirm. ADX, not as big a deal, but DI definitely making a lower high as well. So once this goes to a new high on this bar right here, I want to start. I'm like, okay, if this turns around and fails here, I've got divergence, but I don't know for sure it's divergence. So I'm just going to keep trailing a stop underneath these. And you could use a 2-bar low if you want, or just a single bar, but don't use inside bars. You see that inside bar? Don't use that. Just stay below the real bars until you have a stop out. And you would have been stopped out here. Now, it ended up going sideways for a couple hours. Well, that's a day trade. I mean, you don't want to be in for a day trade where you're going sideways like this. That's the goal. And you can use this on the bigger time frames as well. Could be a good strategy for you for exiting a trend where you want to stay in it and milk it as long as you can, but you don't want to stay in as if momentum isn't confirming. So I hope all this makes sense to you, but a key thing to keep in mind is that markets are fractal, and what I mean by that is if you keep breaking it down, and I break it down by fives, ratios of 5. So I start with a monthly chart, break it down about 4 or 5 weeks, right, to a weekly, and then 5 days in a week. And then I go down to the hourly, and yeah, there's 6 hours in there, but it's close enough. And then I actually go down to a 10-minute. That's another 6 ratio segment. And then I go down to a 2-minute. It works. It works very, very well. And you'll see these same patterns develop over and over and over again. And I definitely urge you to go and look at these so you can see what is causing the move. I mean, it made sense to me what caused this move to go up. It was a very high quality intraday setup right near the lows we were testing. Okay, go ahead and post any questions or comments, and we'll see you next time. Thanks.